You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means it is time once again for Options Bootcamp, rolling on into the new year here with some new episodes for you. Hopefully you guys are enjoying those. Hopefully you're enjoying, should be a top 5 of the year for 2020. Hitting the feed sometime soon if it hasn't already, breaking down the top 5 most popular episodes for you guys. I'm going to go out on a limb and say some of them had something to do with Apple and Tesla and maybe a little Bitcoin in there. We'll have to go see. I haven't looked at the overall list yet to see what it is, but I'm guessing something like that will be in the top 5. Of course, my name, Mark Longo from theoptionsinsider.com, as well as, of course, on the ever exciting Options Insider Radio and Network. And I'm pleased to be joined once again here in the new year of 2021 by my cohort, my partner in options crime, the black-hatted one himself, Mr. Dan Passarelli, the founder of Market Taker Mentoring and the author of 1 or 2 or 27 options-oriented books. Dan, welcome back to the program. I can never keep count of how many books you have. I think 27 is a good estimate. What do you think?
Yeah, give or take, rounded to the nearest, whatever.
Round to the nearest 22 or so, and we're good. All right.
Yeah.
All right. Dan, I hope you're ready. Hope you got your question answering pants on, because it is time for a mail call palooza.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody. That music means it is time for you guys to shine the spotlight on us. Sometimes we reflect that bat signal back upon you like we have done a few times so far already this year. First off, we kicked off the year with a very simple question. Listeners, we said to you, we saw a crazy, tumultuous year, big sell-off in 2020, followed by a more aggressive recovery that ended the year up on pretty much every major market out there. If you listen to our TWIFO end-of-year wrap-up, you know that we're hard-pressed to find 5 names that sold off on the year. Every complex was up. So crazy year. So we asked you, simple question, focusing specifically on the major markets and major indices out there. Do you think they're going to be higher or lower? S&P, NASDAQ, all your favorites out there, the Dow. And Dan, the numbers are in so far, and I'm surprised. Our audience usually likes to fade stuff, but they were feeling the bull out there. 65.5% saying they're going to close higher on the year, 25.4% saying they're going to close lower on the year, and about 9% saying they're already in cash. What do you think about that, sir? Does that surprise you, or is that kind of what you expected?
Yeah, I would say that is pretty within what I would expect. I don't think that's crazy or out of bounds too much.
You're a perma-bull like your favorite over there, Uncle Mike, who refuses to pay you. That's why. Two of you never saw a bull market you didn't like out there. Speaking of bull markets, well, there have been aggressive bull markets in two names in particular right now. So we have a little fun poll going on right now. By the time you hear this, it might be done, but we'll see. If you're listening live, you could certainly get in there and make your vote heard. We asked you quite simply, which of these two insane products will hit a 1 trillion, 1T market cap first? Will it be Tesla or Bitcoin? When we posted this, Bitcoin was at about exactly 600 billion and Tesla's, I think, around 760 billion. So Tesla already a little bit ahead in that race. And Dan, our audience was pretty evenly split. It was about 51-49 for a while. It has since trended a little bit stronger towards the T, with Tesla at 59.8%, followed by Bitcoin at 40.2%, sir. If you have a vote, Mr. P. Well, first off, what are your thoughts on our audience numbers so far? Are you surprised by that? And then B, what do you think is going to hit it first, if either, sir?
Man, this is another one where I'm not terribly surprised versus these two choices. I would say Tesla, because, and don't get me wrong, I'm not anti-Bitcoin at all. For all you folks out there who are, like Mark said in our last show, the new gold bugs, not anti, but it's still an asset that doesn't have any utility just yet. You can't do it much with it. It's still a concept that we're trading. But Tesla, arguably there will be people who say it's extremely overvalued, and it might be, but that's just people getting ahead of what seems to be an inevitability. The world's going electric cars. So I would say Tesla hits it first, because I think Bitcoin could easily pull back a whole bunch, but I wouldn't be surprised if it beats Tesla either.
There you go. Very political answer of you, sir. You answered both at the same time. Well done. Well done. Very adept of you. I think you should run for Congress next. All right. Next up, we've got, this name sounds familiar, sir. He's written in before, Mr. P. This is from Theodore Domzalski. He says, Happy New Year, Mark and Dan. Then he says a not safe for work term for the year that was 2020. I shall not repeat it, but I think we all get your sentiment. 2020, not a great year for most people out there. He says, and now, so we have Dan watching The Mandalorian and Mark is now smoking meats. I used to do a lot more smoking. I always liked ribs using the 2-1-1 method. 2 hours naked, 1 hour wrapped, 1 hour naked at about 350. But I digress. Wow, that's more involved than I get in it. But hey, interesting. Thanks for sharing. That's right. He's our food guy, Dan. But he adds, my options question is about Theta. How is Theta calculated during weekends, especially these long weekends? Is it based on trading days or calendar days? Oh, he adds an addendum. He says, P.S. Here's a photo of my beef stew. That's right. He's always sent us pictures of cheeseburgers, and I think he lectured us on the proper way to order a Philly cheesesteak in the past. So he included a photo of beef stew here as well, listeners, which looks interesting. It's pretty heavy on the mushrooms, I think, I like a good mushroom. There's a lot of mushrooms in this beef stew. It looks like the small pieces, I guess those are potatoes. I've got to have some potatoes in your stew. I'm not sure what the other parts are, but a lot of peas. It's interesting. It probably wouldn't be my first way to go, but hey, to each their own stew. Isn't that the saying, Mr. P?
Stew is the spice of life. Wait, never mind.
I think if stew is your spice of life, then maybe you're doing it wrong. But hey, I digress, sir. Just like our listener does. He wants to know about Theta. What's the deal with Theta, Dan? Do they just turn it off during the weekends?
Yeah, I get this question a whole bunch. And in our Greeks class, I cover it quite extensively. So here's the gist. Market makers react to the market, to selling pressure, by moving the day ahead once that selling pressure comes in, or once they kind of give up and say, man, I can't gamma scalp enough to cover my Theta, I'm going to make my options a little cheaper so that it incents people to buy from me so that I don't have that Theta. So that's a long, fancy way of saying Theta just kind of comes out each day when it comes out, but like everybody knows that there's going to be the weekend when you can't trade. Market makers know it, you know it, everybody knows it. So market makers tend to move their days ahead. You know, they'll start on like a Thursday morning. Maybe they might start out trading on Friday's days come Thursday morning. And by the end of Thursday, they might be trading on Saturday's days. And then, you know, by the end of the day, Friday, they might already be trading on Monday's days. So it is based on calendar days, or it is based on calendar days, but it only happens on trading days. So what we tend to see is more Theta happening towards the end of the week and less Theta happening on Monday, Tuesday, Wednesday.
Yeah, I remember those good old days, Dan, when you go back to the office and now let's put in the weekend. Let's roll ahead the Theta, right? Not so much anymore. It's kind of become an interesting evolution of the options market, as Dan was kind of mentioning there, to see when they're taking the weekend out now, how quickly it's coming out. You know, usually if it's a quiet time, maybe leading into a long holiday weekend like July 4th, you're going to see that weekend coming out pretty early. It's not a heck of a lot going on anyway. Don't want to be caught holding the bag there on Friday afternoon with a bunch of Thetas. They're going to start getting rid of it early. On other times when it's crazy rock'em sock'em weeks like we saw for a lot of last year, that Theta comes out a little bit later and doesn't come out as aggressively because, you know what, they might want to keep a little bit in their back pocket over the weekend because these are crazy times. So weird stuff. That doesn't mean you should come in and, you know, crush the bid at 3:00 on a Friday afternoon. In fact, if you're doing that, you kind of missed the lesson we just gave you. That Theta's already out usually by that point. You're probably selling options maybe even on Monday, even early Tuesday level at that point. You don't want to give away a weekend for free. That makes no sense. We all saw what happened last year. Weekends have very literal risk to them. You don't want to be caught holding the bag for nothing. So yeah, sometimes there's a good argument to make. Maybe you want to buy options on that time frame and get a little free weekend out of them. There's been a lot of interesting analysis on that over the years, and it kind of goes back and forth, listeners. But yeah, in the short answer, they take that Theta out they're not fools. They don't give away free things. It doesn't come out in one big chunk the way it kind of used to. It kind of evolves much more gradually and much more nuanced method over time. All right, here's a question we got a lot of late, Dan. It's kind of a timely one. It comes from Federico Rodenas, this particular one. We got a bunch of others. He says, hi. Well, hello, Federico. He must be representing our international listeners here, Dan. He says, I am holding China Mobile Leap calls, and I haven't been able to find a straight answer on what will happen to Chinese ADRs due to delisting. Will the stock go to OTC? Will it be completely delisted? What will happen to the options holders? Thanks in advance, Federico. Yeah, this was an interesting story. Obviously, the Trump administration threatening to ban trading in all these names. NYSE was going to delist them. I believe they put a stay of execution on that. But still, the first advice I give to everyone who has a question like this doesn't have to be delisting. Any sort of question around what's going to happen with symbol X in this given time due to a corporate event, do whatever the heck is going on. The first place you need to go is to the Options Clearing Corporation website, OCC, and then type in your ticker symbol in there. And chances are there will be a circular that they have issued explaining exactly what's going to happen to the options on your name. So if it's a corporate action, they'll say, hey, you're going to get certain amount of these for that. They're going to swap the symbols. They're going to adjust the prices or maybe nothing, depending on what the case may be. So that's the place to go because they actually are the ones who determine it. So they're the ones you want to talk to and ask about that. But yeah, the short answer to your question is that delisting is never good for premium holders, in particular for someone who's got long-term premium. Dan, what would you counsel for our friend Federico, particularly now that he's got maybe a little bit of a stay of execution, Dan? What usually happens for these delisted options, particularly long-term premium holders?
Yeah, I've got some experience with this kind of thing. But before I do, because I don't want anybody to be making any mistakes based on what I'm about to say, I am going to just echo what Mark said. The people who have the final decision on this is the Options Clearing Corporation. You can call 888 options. They will tell you for sure, because in situations like this and takeovers and other situations, there are things and outsized dividends. There are things that typically happen, but every once in a while they're handled a little bit differently. So you can never assume and you can never go off what typically happens. Now, I will tell you what typically would happen and what I would expect to happen is if China Mobile gets delisted on the day after the X date, once they are delisted and those underlying stocks never trade before, that becomes effectively expiration date for options. Like, you think expiration date is the third Friday of, 2022. But if they delist it tomorrow, expiration is tomorrow. Like, all that premium just basically is gone. It decays all in one day, and you're going to lose a ton if you're an option holder. So that is what I would expect to happen. I don't see how it could happen any other way. But again, for the third time, Mark said it once, I said it once. Here's the third time. Call the OCC and get the real answer on that.
Yeah, and Federico and everyone else who's out there holding the bag on these, it may be already too late. But if you got to stay of execution on the delisting, Dan's right. It's usually a black hole for premium holders, in particular long-term ones. So if you still have a bid on these options, you can get out. Get the heck out of Dodge, because that time decay is going to go the way of the dodo fairly quickly once they delist this thing. So you got to stay of execution. Take advantage of it. Get out of these options. If you have questions, head on over. For any of these types of things, listeners, OCC is the place to go. Next up, you mentioned Bitcoin, Dan. Niloy has a question along those lines. He or she wants to know, has Dan changed his mind about Bitcoin options after the run-up? Dan, you mentioned on a recent show, you used to be a bit of a miner even. So you were kind of interested in crypto for a while. Then the worm turned for you and not so much. And you certainly weren't into the options. Niloy here wants to know, have you changed your mind, sir? Has this incredible explosion up to 40,000+ and then the retreat below it, but still almost 2x the highs it hit a few years ago? Has any of this changed your mind, sir?
Well, let me first clarify exactly what my mind is with Bitcoin options. So first of all, just know I'm not a Bitcoin hater or liker. It's this thing, and we can trade it. The banks are starting to trade it. I think it's a fantastic opportunity to trade, right? Trade, invest is a different conversation, but trade, yeah, it's a great opportunity. That said, here's the thing. If you buy an option on Apple, okay, like maybe you go and buy 100 options on Apple, and Apple runs up $50 and you're owed, $500,000. Well, there's somebody who literally sold you that option, and technically that person owes you $500,000, but it's really not that person anymore. So what happens is there's a clearing firm, the Options Clearing Corporation, that finds people who are short that, and I'm really way oversimplifying this, but they guarantee that you are going to get your money. They guarantee it, like the FDIC guarantees the money in your bank up to $250,000 or whatever it is. But here's the thing: the SIBO has clearing, the Board of Trade has clearing, the New York Stock Exchange has clearing. Some wacko, some exchange that trades Bitcoin options, that lists them, that was programmed by some guy in his mom's basement. Like, there's no clearing there. If somebody goes and sells you 100 of these Bitcoin options and you make $500,000, that person might just disappear, and you can say, okay, where's my money? Oh, I don't get my money? Why not? Oh, well, because the guy who sold them to you isn't there anymore. Well, where is he? I don't know. Like, it's really important to understand and respect, like, why clearing firms matter so much. Like, you would be insane to trade, buy or sell options or futures, any derivative product on a cryptocurrency exchange. The only cryptocurrency exchange that I would say has some protection, but still, to the best of my knowledge, doesn't really have this counterparty risk protection clearing, is the Gemini exchange. But that said, I haven't checked in a while. To the best of my knowledge, even if they listed options on it, I wouldn't touch it until there is clearing. I want to know that if I make money, I'm actually going to get the money I make. And this is no small thing. Like this is no small thing. Even with clearing firms, when people make too big of bets, if the clearing firm can't cover it, people who made money might not get their money. And that's happened only a couple of times in the history of trading. But counterparty risk is a real thing, man. So no, I have not changed my mind.
There you go. He has not changed his mind. You're right. Clearing, we just talked about them on our last question. OCC coming up twice here. Clearing it's an important thing. There's a reason why it exists out there. Listen, you hate to have this massive windfall. You bought the 20,000 strike options a year ago, and now they're 20,000 handles in the money, and you go to collecting. Oh, no. That's why clearing is a good thing. Here's one from Albert J. He wants to know, what are your thoughts on utilizing a stock replacement type strategy right now in SPY? And what is your optimal structure for doing so? Well, yeah, we talked about this many times, I think recently, actually, on the show. And the reason for that is it's kind of an optimal time to explore this type of strategy, Albert and everyone else out there. Think about the scenario we're all facing. All the major indices, most of the individual equities you guys like to trade are at or near all-time highs. So their valuations could continue to go up. So you may want to have a little bit of skin in the game to participate in that. But you're also worried about tremendous potential for downside. And that's where something like a stock replacement really comes in, because you're putting on a position that still allows you to play to the upside, but your risk to the downside is dramatically curtailed. And that's kind of what we're talking about. What is stock replacement? Go back, check out our recent episodes, listeners. But quick answer, it's replacing your stock position, which is effectively the 1 or 100 delta, with some sort of deep in the money call contract. Typically, it's going to be at least a 65 delta, probably a 75, maybe even more, 80 or 90, depending on how you like to go. And then, of course, you can augment it doing things like Brian likes to talk about on his OPR show, the fig leaf, where you're writing covered calls against it. And now you're paying for a lot of, if not all, of that call premium. So a lot of things you could do with the stock replacement right now that are attractive. And certainly in names like Tesla and others, where that upside call vol is super juicy, makes those kind of strategies a little bit more attractive as well, even though the vol on that deep in the money call you're buying is also going to be pretty juicy as well. So bear that in mind. But Dan, anything you want to share here? I know we talked about stock replacement a few times recently, but anything you want to share here for Albert? Are you into those right now? And if so, what is your quick overview of what your optimal structure is, sir?
I mean, I am, sometimes I am, sometimes I'm not. Right now, I mean, in my long-term investing, my IRAs, I just own shares of SPY and sell calls against them. I think, like, what would your objective be for creating a stock replacement type strategy? Like that's really the question. Like saying stock replacement strategy, well, why do you want to replace a stock? What advantage are you hoping to get? Because then when you answer that question, then we can talk about really constructing a strategy smartly to help you meet that objective. Mark mentioned doing like an at least 65 to 80 delta is pretty common. I like to keep those, if you're doing that, you're basically doing it for the cheap put, right? Because you can only lose what you pay for the call, and you're paying a little bit of premium over parity. I mean, you're effectively buying the underlying and buying a put. But, I've found that when you go out too far, like a lot of people like to do that with leaps, there's just so much premium that, albeit slowly, leaks out. It's low theta. But man, like over time, you might be paying 15% to have that put, where you could just, I don't know, maybe buy some shorter puts and pick your spots. So I don't know, just the blanket statement of, is there a stock repair strategy? Yes, but why do you want it? What are you trying to accomplish with it? And then we can craft a nice strategy.
Yeah, you definitely don't want to get caught up in going too far out. We had listeners ask about leaps. I tend not to go that far out in these type of strategies. I think 6 months is a good optimal time frame, somewhere maybe 3 to 6 months. Maybe a little longer if you like to get a little crazier, but you're going to pay a lot of premium for those. So just bear that in mind. Overpaying a ton of premium to go too far out, you're kind of eliminating the benefit, the capital efficiencies that you're getting from doing a stock replacement. You might as well just buy the stock at that point. So bear that in mind. But a good question there Again, Albert, everyone also has questions about stock replacement, stock substitution. Go back, check out some of our recent episodes in the archives. You go into those in a little bit more detail there. Unfortunately, Dan, that music means we come to the end of this episode here of Options Bootcamp, answering the folks' questions. But before we go, anything you want to add to the folks? Maybe you want to leave them a little bit of a hint, a little bit of a tease of what's cooking over there at the land of MTM. And now is the time, sir. The floor is yours.
Oh, we're working on our next week. We're going to be holding a complimentary webinar on our earnings trading strategy. So right now, if you come to marketticker.com and create a free account, you'll actually get a personal invitation to attend that free webinar. So we'd love to see you join us.
There you go. Check them out. Markettaker.com. 2 T's in there. Market and Taker. On behalf of the black-hatted one and indeed myself. Remember, he loves Bitcoin. Send your hate mail to Dan, not to me. We love all of you out there. Thanks for downloading, streaming, subscribing, for listening live, for sending in your questions. Keep them coming, for voting in our polls, all the things that you do. We love all of you. And we'll see you back here next time for another episode of Options Bootcamp.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.